I remember staring at my phone in September a year ago. $9.10 had just hit my account, $9.10. I could barely buy lunch with that. My buddy at work laughed at me when I showed him and said, "That's not even a burrito." And he was right. But what he didn't understand, and what I'm about to show you with actual numbers from my real portfolios, is that $9 burrito money turned into something that changed how I think about money completely. Let me take you back to where this started, because the beginning of my story isn't some inspirational moment. It's actually kind of embarrassing. Years ago, I was scrolling through Twitter at 2 a.m., watching people talk about financial freedom and passive income, while I had about $300 in my checking account and no clue what a dividend even was. I thought stocks were just things you bought low and sold high, like some kind of Wall Street video game. I had zero investments, zero retirement accounts, zero plan. The wake-up call came from the most random place. My coworker told me about her Roth IRA and HSA investments. That night, I went down a rabbit hole. And instead of doing what most people do, which is get overwhelmed and quit, I decided to start simple. 2 funds, that's it. One for dividends, one for growth, one in an HSA, one in a Roth IRA. I didn't even fully understand why these accounts mattered yet, but I knew they had something to do with taxes, and I hate paying taxes. So I opened an HSA through my employer's health plan. For those who don't know, an HSA is a health savings account. You need a high deductible health plan to qualify, which I had because I was young and never went to the doctor anyway. It's triple tax advantaged. You put money in pre-tax, it grows tax-free, and you take it out tax-free for medical expenses. But after age 65, you can withdraw from it for anything just like a traditional IRA. It's basically a stealth retirement account hidden inside a medical savings account. I decided to put SCHD in there, Schwab US Dividend Equity ETF. It doesn't have some cool story behind it. It's just a fund that holds about 100 high-quality US companies that pay dividends consistently. Companies like Coca-Cola and Chevron. Boring stuff that's been around forever and will probably be around forever. I liked boring. Boring meant I wouldn't obsess over it. I bought my first shares in September 2024. Over time, I accumulated 498 shares. My total cost basis sits at $13,647. As of right now, the current value is $13,757. That's a paper gain of $109. But that's not the story. The story is in those dividends. Remember that first $9.10 in September? 3 months later in December, I got $37.80. I'm not going to lie, I was hooked. It was like planting a tree and watching it grow. Except this tree paid me in cash every quarter. By March, the dividend was $64.40. June came around and I got $87.99. Then September hit again, $98.52. And just this month, I got $137.21 in my account. Do you see what happened there? That's not just growth, that's exponential growth, from $9.10 to $137.21. And I didn't have to do a single thing except not touch it. I didn't sell, I didn't panic, I didn't try to time the market. I just let the companies do what they do best, make money and share it with shareholders. But I wasn't satisfied with just dividends. I wanted growth too. That's where my Roth IRA comes in. A Roth IRA is different from the HSA. You put money in after tax, meaning you already paid taxes on it, but then it grows completely tax-free, and when you retire, you take it out tax-free. No taxes on the gains, ever. Let that sink in. If you put in $10,000 and it grows to $500,000 over 30 years, you pay zero taxes on that $490,000 gain. The government doesn't touch it. That's insane. So in my Roth IRA, I bought FXAIX, Fidelity 500 Index Fund. It tracks the S&P 500, which means I own a tiny piece of the 500 largest US companies: Apple, Microsoft, Amazon, Google, all of them. It's basically a bet on the American economy continuing to do what it's done for the past century: go up over time. I have 53 shares at an average of about $206 per share. Total cost basis, $11,083. Current value, $12,880. That's a paper gain of $1,797. That's a 16.2% return. FXAIX pays quarterly dividends too, just smaller ones, because it's focused on growth companies that reinvest most of their profits. In December of last year, I got $24. April brought $25. July paid $31. Then in October 2025, I received $34.18. And just this month, December 2025, I got $38.81. Now, here's where I want to pause and ask you something real. When you think about your financial future, what scares you more? Not having enough money or not knowing where to start? Drop a comment and let me know, because I think this is the real thing holding most people back. For me, it was both. But once I started, the fear of not having enough became way bigger than the fear of starting. And that's what pushed me to keep going. So let's talk strategy, because I didn't just randomly pick these investments. There's a method here that I think makes a lot of sense, especially for regular people like us who aren't Wall Street analysts. SCHD in my HSA is designed to pay dividends that grow over time. The companies in this fund are required to have at least 10 consecutive years of dividend payments, strong financial health, and reasonable valuations. It's basically a filter for quality. These aren't speculative tech startups. They're established businesses with proven track records. As the companies grow and increase their dividends, my income grows too, even if I never add another dollar. FXAIX in my Roth IRA is not trying to pay me big dividends now. It's trying to grow my wealth over the next 30 years. The S&P 500 has historically returned about 10% annually over long periods. Some years it's up 30%, some years it's down 20%, but over time it trends up. And because it's in a Roth IRA, all that growth is mine to keep, tax-free. Compare this to a regular taxable brokerage account. Every time FXAIX or SCHD pays a dividend, I'd owe taxes on it that year. Every time I sell shares for a profit, I'd owe capital gains taxes. Over decades, those taxes compound into a massive amount of money that I'm giving away. By using tax-advantaged accounts, I'm keeping all of that money working for me. This is the stuff they don't teach you in school. I had to figure it out myself by reading, watching videos, and honestly, making mistakes. I wish someone had just laid it out this simply when I was starting. Now, I'm not going to sit here and tell you this has been easy or that I haven't had doubts. There were months when SCHD dropped 5% and I wondered if I should sell. There were times when my friends were buying crypto and making fast money and I felt like I was missing out. But consistency beats intensity every single time. The person who invests $500 a month for 30 years will destroy the person who invests $5,000 once and then stops. It's not about being the smartest investor or timing the market perfectly. It's about showing up, staying in the game, and letting time do the heavy lifting. My dividends are growing, my account values are growing, and I'm sleeping fine at night because I'm not gambling. I'm investing in real businesses that sell real products to real people. Coca-Cola isn't going anywhere. The S&P 500 isn't going to zero. Short of an apocalypse, these investments are going to keep chugging along, paying me, and growing over time. I wanted to share my actual numbers with you, not some hypothetical scenario or back-tested results, because I think transparency matters. This is real money. These are real accounts. This is a real strategy that's working for a real person. I'm not a finance guru or a certified financial planner. I'm just a regular guy who got tired of being broke and decided to do something about it. I think the biggest lesson I've learned is that investing isn't about getting rich quick. It's about getting rich slowly and surely. It's about building systems that work for you while you sleep. It's about making decisions today that your future self will thank you for. If you're watching this and you haven't started investing yet, I want you to know that it's okay. I was there too. Start small. Buy one share of an index fund. Get familiar with how it feels to own a piece of a company, then do it again next month and the month after that. Before you know it, you'll have a portfolio and you'll be getting dividends. This isn't a one-time thing. This is years in the making. So that's my story. From zero investments to nearly $27,000 across 2 tax-advantaged accounts. It's not perfect, but it's progress, and progress is all that matters.